Holy smokes, folks. I just did so much math. It's ridiculous. Okay. I had to bust out my calculator and account for all my different accounts. What I'm going to share with you in this video here today is my top 10 biggest investments in the stock market. And I'm also going to share exactly which of these stocks I'm planning on buying a lot more shares of and which stocks I'm just holding. Okay. Because certain of these stocks I'm sharing with you here today, I have no plans to add any more shares. Like, I'm good. Some of these stocks I'm planning on buying very, very heavily. Okay. Hope you guys enjoy this as always. Now, let me address one thing before we get into this video. If anybody's watching this video who doesn't usually watch my content, I'm a long-term investor. I'm not planning on trying to get in and out of these stocks and like selling one day and buying the next day and selling the next day. If you know, my folks that know me, which is my core audience, you guys know, like, if stocks are going up, that's great. I make money. If stocks are going down, that's great as well. I get to add ownership of companies at much cheaper rates. So either way, it's a win-win for me. And in the long term, as long as I'm right about the long-term trajectory of my companies, I'm going to make a lot of money in the end. So yeah, that's that, guys. Now, real quick here, it's a holiday weekend, right? It's Memorial Day weekend, and something that's great to do on holiday weekends, other than spend time with family and things like that, and on the weekends in general, is listen to earnings calls. And so on Hungry Bowl, you know, I haven't really mentioned Hungry Bowl for the last several months. And the reason being is we've been doing a lot of stuff on the DL when it comes to Hungry Bowl, making a lot of like slight improvements that really make the user experience a lot better and a lot more stable. And but you know, we got all the earnings calls from this entire earnings season up there on Hungry Bowl now. You can download that on your iOS or your Android store and listen to, I don't care if it's Tesla, Apple, small cap companies, mid cap companies, just about every single company you could possibly imagine that's a public company. We got the earnings calls on there now from this last earnings season. So, you know, that's just one of the great things about Hungry Bowl. You can easily just listen to it. We even have it where you can like 2x the speed if you want to listen to it double time, or 1.5x speed or whatever. So, you know, definitely check that out. Like I said, I haven't been mentioning Hungry Bowl. I'm trying to like keep it on the DL for right now, but just so you guys know, now's a great time to do that. Okay. All right, guys. So my 10th biggest investment is a company named Dropbox DBX. This is a company, as a cloud company, e-signing a documents player, and really, really successful business model, great business model. They have almost no customer concentration. They have a recurring revenue stream, and obviously folks need cloud. I've been using Dropbox. I've been a customer of Dropbox since probably 2015, and I'm still a Dropbox customer to this day. It's still my main cloud I personally use, and I love it. It's just simple. It's easy for me to share documents that I need to share and things like that. And I use HelloSign as well, which is their e-signing a document product. So Dropbox, great business model, low PE. It's an $8 billion market cap on this one, 3.5 price to sales ratio, which is way too cheap for a business model like this. Okay, 22 PE ratio around for this company. Good balance sheet, good management team. As far as Dropbox, am I planning on buying any more shares of Dropbox? The answer to that is no, I am not planning on buying any more Dropbox. Not because I don't believe in Dropbox. It's just from the mere fact that there's too many other good deals in the market right now that I think are better risk rewards if I'm going to put money in. And if I'm putting new money in any stock, I always have to think about where's the best places for my money at that time. What gives me the best risk reward profiles at that particular time. And for Dropbox, I think it gives me a pretty darn good risk reward, but it's just, I feel like there's better opportunities out there in this market given how much stocks have fallen. Okay. Number 9, biggest investment for me is Meta. Facebook. Obviously, they own Facebook platform and all the businesses that are inside the Facebook platform. They own Instagram and all the businesses that are inside the Instagram platform. They own WhatsApp. They own Oculus, Metaverse, a huge opportunity. One of the best balance sheets you'll find in the world. For sure, top 10 balance sheet in the world, probably top 5. Right now, it's trading a little over $500 billion market cap, which is far too cheap. This one should be trillion plus easy right now. A 4.4 price to sales ratio is just laughable for this type of business model. A 14 PE ratio is just silly. Price to book of 4 on this stock right now. And here's the deal with Meta. I haven't been buying this stock actively since like 2018. I've just been holding the shares. But I'll be honest, the stock has fallen so much that I'm starting to pick up shares again because I think this is one of the easiest monies in the stock market right now. Like literally one of the easiest monies. I never thought I would ever be able to buy shares of Facebook under 200 ever again. I'll just be honest. Like outside of the Rona crash, like I thought that would never happen. And the fact that I've gotten that opportunity, I just have to take advantage of that for a company that has this type of financial statements, these type of business models, and just continues to grow and grow and grow. So I absolutely love Meta. That's my 9th biggest investment. What's my 8th biggest investment? It is PayPal, PYPL. This is a new investment for me this year. But here's the deal. PayPal stock had already been falling massively. And then going into this year, it started falling a ton more. So recently, I've started to pick up a whole bunch of PayPal shares, and I've built it actually into my 8th biggest position, topping Meta now. I love Meta and PayPal probably equally, to be honest. I love the risk rewards on both these stocks. PayPal right now is under $100 billion market cap, which I really like the risk reward there. Price to sales ratio of 3.8 for a fintech like this. Come on, man. 3.8 is just silly. 28 PE ratio on this one. Price to book of under 5. Great balance sheet. Like I said, great income statement, great cash flows, great management. PayPal and Venmo are usually the number 2 and number 3 most popular finance-related apps in the world, okay? Usually the only one that usually tops them, at least in the United States, is what's called Cash App, which is owned by Square. But when you own number 2 and number 3, like that's just absolutely amazing. So I love PayPal. I think it's just going to continue to be a growth company in the future. And I think it's another one of those very easy money stocks, as I call it, okay? My 7th biggest investment in the stock market, this might surprise some, Avant Brands. It's actually my 7th biggest investment in the stock market right now. By the way, in regards to Meta and PayPal, I'm planning on buying both those stocks. As far as Avant, I'm probably not going to buy that many more shares of this one. The fact that I built into my 7th biggest position is probably about good. This is my smallest market cap company I own by a mile. Okay, $42 million market cap's like nothing. Price to sales ratio of 4.5 on this one. I'm not going to tell you guys the type of product they sell if you want to do your own research on that. I don't want the algos to pick up on anything, okay? But they're very, very successful at the product they sell. And look at their latest quarterly results. Absolutely amazing. And when it comes to Avant, like what gave me the I guess you can say, the drive to make this a top 7 position for me. So when it came to Avant Brands, one, the industry they're in is just going to continue to get bigger and bigger, and then there's going to be a lot of bankruptcies in that space. There's already starting to be. There's going to be a lot more over the next year, so which means the competition is going to be far less in that category. Okay, the financing is not there for a lot of those companies. I think federal legalization for that product's coming sooner rather than later. The balance sheet is absolutely amazing at that company, and the management team, Norton and the management team at that company have done such a dang good job at running that company. And when you're talking about these smaller market cap companies, it's very hard to find good management teams. I mean, very hard. And as somebody that's looked at a lot of these companies over the years, a lot of the management teams are a hot mess. And Norton's actually got his head on straight and actually is running a dang good company. And you can see the proof is in the pudding, as they say. Men lie, women lie, numbers don't lie. Look at their last quarterly results. Look at the results they've put up over the last several years. And it's impossible not to be extremely, extremely impressed with everything the company's doing. And never mind the opportunity this company has in the back half of this year and going into next year. And so when it comes to Avant, it's my smallest market cap company I own, but like I said, I'll probably buy a little more shares this one, but not a ton. It's such a small market cap. It is still a risk at the end of the day, and obviously all stocks are a risk. It doesn't matter if it's PayPal or if it's Avant. All stocks are a risk. It's just I can't make this one too huge of a position. But yeah, I love that one. And like I said, management teams, they do matter, and especially for the smaller market caps, management teams matter in a big, big way. All right. Number 6 biggest investment for me is Oatly, Oatly. This is a company that's disrupting the entire dairy industry right now with their oat milk product, which is absolutely, the velocities are ridiculous, okay? And the most beautiful thing about their business model is not just all the new stores they're getting into, the SKU expansion, meaning they're launching a lot of new products like yogurt products, ice cream products, and things like that. But the biggest thing for Oatly is because they basically sell a product that replaces traditional cow milk for people, folks like myself, that I started drinking Oatly, by the way, before I actually bought Oatly stock. Folks like myself used to buy, 4 to 6, I got 3 kids too, so we used to buy 4 to 6 gallons of cow milk, basically every single week. Now we buy 0 gallons of cow milk, and we buy 5 to 7 of the cartons of Oatly each week, okay? And so now every single week, my wife goes to the grocery store, or we get, the food delivered or whatever, we have 5 to 7 of those cartons coming every single week in and week out. week in and week out. No different. So that's the beautiful thing about this business model is now they just got a customer likely for life, right? And maybe we switch to other oat milk products down the road if there's ever something better. But with how far superior Oatly is versus all their competitors, if anything, I think they're going to jump, more to the front. And so this is a company that on the marketing side, they understand on such a high level. And I used to be an investor of a company named Hanson's Natural Beverage, which nowadays you guys will know as Monster Beverage, and a very successful investment of mine. And when it came to Monster, it was all about marketing. At the end of the day, they sold an energy drink. It's the same flip and flapjack and energy drink everybody else sells. But what Monster understood was product innovation, and what Monster understood was marketing. And when I see Oatly, I see a company that understands marketing. Okay, that's what's so key when you're talking about food and drink companies. Now, when it comes, and especially when it comes to drink companies, specifically, when it comes to Oatly, here's the deal. This is the stock I want to buy the most shares of for the remainder of this year. There's no stock in the entire stock market that I want to add more shares more aggressively than Oatly. I want Oatly to be a top 3 position, if not a top 2 position by the end of this year. Right now it's number 6. And by the way, it's climbed to number 6 quickly because this is a stock I pretty much just started adding this year and just been adding, especially as it fell to $5, $4, $3. I just was, I've added so many shares recently, and that's how it built into my 6th biggest position in such a quick amount of time. It's going in top 2 or top 3 long term. And when I say long term, actually, I mean within this year. So Oatly, I'm not slowing down on buying this one anytime soon. I'm just going to continue to load up on shares for that one for a while. I mean, it's at $4 here today. I'll buy the stock all the way up to 10. It would have to go up 150% from here for me to start considering, okay, maybe I'll lay back when it comes to buying Oatly. 150%. So it just speaks volumes about my level of confidence when it comes to Oatly and how many shares I really want to add of this company, okay? Number 5 biggest investment for me in the stock market is The Planet. Once again, if you want to look into the product this company sells, suit yourself. You can type it in Planet 13, okay? They compete very differently than somebody like an Avant. They're not just own brands, but they create these superstore experiences that are absolutely amazing. And so they're a retailer as well at the end of the day. They just create a really, really cool experience. And I've gotten a lot of branding behind that. It's a $300 million market cap, so it's one of my smallest market cap companies I own. About a 3 price to sales ratio on this one. Stock's been absolutely obliterated. As you can see there, price to book of 1.4. Great balance sheet of this company. Huge opportunity in Florida as they're going to expand out in Florida. The OC store, I'm really excited to see the Orange County store results this summer. This is going to be their 2nd year in business as of this summer. And here's the deal. When the Las Vegas store hit its 2nd year, we definitely saw a ramp up in business. So we got to see that sort of ramp up when it comes to Orange County store. If we see that, that's going to give huge confidence, not just to the Orange County store opportunity, but to Planet's overall business model long term. Because, that store started off really slow. There's a lot of people are like, well, maybe they're just a Vegas success and they can't expand outside of Vegas. If all of a sudden we start to see that Orange County store put up some real big numbers in terms of shareholders that are watching the stock, kind of waiting to see what happens, that would be a huge vote of confidence because that Orange County store, it's not in the best location in my opinion. It's kind of like in an industrial area. If they can make that store a success, oh my gosh, okay? So, because I'm telling you, in that location they picked for that store, and I understand it's only their 2nd superstore they ever open, so they're going to learn more and more as the company goes along. That's the thing with all these companies, especially the younger ones, like a Planet is a younger company. They learn, and they get better, over time, and, all of a sudden, as a company is 10 years old, 15 years old, 20 years old, they're doing things so much smarter than they were doing before, and I've just consistently seen that with good management teams. So, yeah, my 5th biggest investment, as far as me buying more shares, maybe a little bit, not a lot. I'm pretty good. I'm good with having Planet about my 5th biggest investment. So I don't see myself adding a ton more shares. I see myself just adding some shares here and there for the Planet. Okay, my 4th biggest investment in the stock market right now is Corsair Gaming, CRSR, which is a gaming company in the hardware space. Also, they sell streaming equipment in the hardware space as well. $1.5 billion market cap on this one. Price to sales ratio of under 1 for Corsair now, about a 33 PE there and a price to book of 2.6. Andy Paul has been leading this company for a long time, doing a great job, okay? Now, here's the deal. Corsair's in a really good spot for the next few years. One is all those ridiculously tough comps when everybody was staying at home, the stimulus money was out there, all those things like that. All that's fading to the backdrop now. And so now their year-over-year comps are going to get much easier. Secondly, a lot of their specific supply chain challenges they had have now started to alleviate, which is great news for them. Third, GPU prices have come down immensely and now are starting to be priced appropriately. That's great news for Corsair Gaming. Fourth, they're expanding into a ton of new products, which have big opportunities. Include they just launched a new laptop recently. It looks pretty darn exciting. Five, there's a big game coming in October. It is called Modern Warfare 2. And this game, I don't want to get too hyped about it. But I can tell you in 2009 when they launched the last Modern Warfare 2, that was a massive success. I don't know if this is going to be anything even remotely close to as big of a success. But if it is, that's just kind of like a call option on Corsair Gaming. If that game blows up and everybody's playing that, just keep an eye out for it because we have not had a real big game launch in quite some time. So if that's a big launch, that's a game changer for Corsair Gaming, an absolute game changer, okay? So Corsair I love. I'm actually going to continue to buy shares of Corsair, but I'm going to buy it at a little slower pace. This is not like me, like I got to load the boat. It's not like an Oatly type stock where I'm like, I got to add as aggressively as possible. Corsair, I love this stock under 20. I love it under 25 specifically. So I'm going to add more shares of Corsair, just not as aggressively as some of these other stocks. Number 3 biggest investment of them all. Maybe there's a little hint here, maybe something like that, okay? Tesla, is my 3rd biggest investment, all right? Now, let me be very clear when it comes to Tesla. If it wasn't for all the shares I've sold over the past year of Tesla, Tesla would be number 1 biggest investment for me. I've taken a lot of profits. I mean, a lot of profits of Tesla. I don't know if I've sold off 7 figures of shares over the past year or so, but it's been quite a big amount. Now, in regards to me and Tesla, I'm not planning on buying any more shares. I'm just planning on holding the current shares I have. And the reason being is when I invest in Tesla, I always saw this company becoming a $500 billion market cap. Obviously, they've way surpassed what I had anticipated. Now, with Tesla, there's so much, it's almost like the company has grown so much since I started investing in stock that it's hard for me to wrap my head around sometimes what Tesla's doing, where they're going in the future. For instance, let me give you some examples. The China business is a huge element of Tesla's business model. I mean, this is probably a third of the market cap is just wrapped up in the China opportunity, right? But what I've consistently seen from China is I can't trust China. I can't. That makes it hard because this is like China is supposed to be Tesla's biggest market in the world, bigger than the United States, bigger than Europe, if not bigger than them combined. But what I've seen consistently from China is a market that I can't trust. I've seen what they've done to Macau, and I've seen how much Wynn Resorts has been hurt. I've seen them do the shutdowns of their cities, and I've seen so much sketchy stuff that China's done even around Jack Ma, Alibaba, that hurts me try to predict out Tesla's numbers because the Chinese government is not making the best decisions for the business. Actually, in my opinion, they make the worst decisions for businesses in China, and they're a communist government. And so, is it possible if Tesla got on somehow China's bad side or got such a big advantage in the market? Could Tesla be considered I wouldn't be surprised at anything at this point in time. I don't even want to create conspiracy theories of what I think could transpire between Tesla and the Chinese government, but just what I've consistently seen is a market that I can't trust. And so that makes it very hard, okay? Secondly, Robotaxi network, a lot of my fellow Tesla bulls, have these great projections that they're going to be so profitable and they're going to make so much money from this. We got to see that. I don't know. I don't have a lot of confidence. I think that's going to be, I think everybody's predicting how perfect things are going to go, and I see that being a mess. I see that being a real mess. Plus, we don't know when they get to that opportunity, to be honest. And as somebody that's owned Teslas for many, many years, I love the self-driving capabilities, but I'll be honest, you're not going to be able to do something like that till it's perfect, and these Teslas aren't perfect yet. And as somebody that's owned Teslas since, when did I get my first Tesla? I think 2019. They're not there. They're not perfect yet. And so I don't know when they get that last 3 to 5% driving down. Maybe it's next year, maybe it's a year after, maybe it's 5 years from now. I don't know. I know that's the hardest part is to perfect this last little bit here, okay? And so me with Tesla, that's hard thing to predict. Also, what does a recession potentially do to a business model like Tesla? So and it's a $700 and something billion market cap, right? And a lot of the shares I've sold out of this one were 750 to, $1 trillion plus type market cap. So for me, for Tesla, it's just a hold. Even if the stock was to go down substantially from here, it's still just a hold. I can't actively buy shares. $250 billion market cap, it's a different situation, but I don't know if it'll ever hit 250, so I'm not going to plan on that. So that's kind of where I'm at with good old Tesla Tesla. It's a hold for me, but it is not a buy. But I would gladly welcome if they ever become a $3 trillion, $5 trillion type company. I'm here for it, baby. Go all the way. I just don't have the most confidence for kind of the reasons I laid out there. Tesla does a great job. They've done nothing but surprise the upside. But there are a few things that are out of their hands. A major recession, that Tesla can't control that. The Chinese government, what they do, Tesla can't control that. So there's certain things that just out of Tesla's control, and that makes it hard to really try to value this company on any sort of long-term basis, okay? My second biggest investment in the market right now is HNST Honest. So when it comes to Honest, it's a $321 million market cap. They sell diapers, baby wipes, makeup products. They're getting much, much bigger into beauty. And this is just easy money. Like, this is going to be a 3x to 5x type stock over the next 3 years, regardless of growth. And the reason being is it trades at a 1 price to sales ratio. Companies in this industry trade at a 3 to 5. So it will go to 3 to 5 over the next 3 to 5 years. And never mind, Honest is going to grow their business into that. They're going to get profitable, I would say, within the next 18 months, if not within the next 12 months. And so when it comes to a company like Honest, I think they just resonate really, really well with the millennial generation. Specifically with, obviously, females is their main demographic, and when it comes to millennials and the new generation, where they call it Gen Z or whatever, is after the millennials. So I remain very, very optimistic on Honest, and if anything, I plan on buying more and more shares of Honest over this next 12 to 18 months. And I think we all know the biggest investment, the Chef, okay? $600 million market cap for the Chef. I don't even know what to say about the Chef. I mean, I talk about the stock so much, it just feels like there's nothing else to say. SKU expansion, brand expansion, sell-through is ridiculous of velocities. They're stealing market share. Plant-based opportunities just going to get bigger and bigger over the next, 5-10 years. I've never seen a company in the food space innovate at the scale and the pace Tattooed Chef's innovating at. And I think this is the next food giant out there. And when you're talking about food giant, you're talking about $10 billion plus type market caps. And that's where I think this company's going over the next decade. And so if I can pick up shares at $500 million market cap, there's just very few risk rewards that I see as more attractive in the entire stock market than a company like the Chef. And they've already talked about profitability in the back half of 23, which is huge for this company. I mean, absolutely massive, guys. So yeah, that's my 10 biggest investments. Those are the ones. And by the way, I'm planning on buying more shares of the Chef too. I'm not done buying shares anytime soon. Graham told me I got to buy 500,000 shares. Okay. So he told me that I'm millennial money, so I got to get to 500,000. Hope you guys enjoyed this video as always. Thanks for watching. I come out with obviously a lot of videos during the week. So if you missed any of those, definitely check out past videos there. Much love. Hope you enjoyed. Thanks for joining me and have a great day.